Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having a fantastic day. We're taking a look here at XRP, helping you understand the best practice and big picture, of course, for coins like this that decide they want to shoot up 30, 40, 50% in just under 2 hours. So we have to look at that and understand what that means. We obviously already did. If you looked at yesterday's video that I put out, it was regarding the SEC filings. That effectively increased the price, right? And now it's tapering off a little bit, but it's still holding above support. And as I expected, we should get a bounce right at the 47-cent range. So once more, I still have my target set for 47 cents. And in that sense, if we were to come down that low, I think it'd be appropriate to consider taking a long position based on yesterday's analysis. Keep this in mind. Things can change in 24 hours. So that's why we're going to look at it again, help you understand kind of what's going on, if there's anything new to bring to the equation, and help us kind of just know if it's worthwhile to take a position at this point, right? Because just say, had you taken a position yesterday when it dipped down to 47 cents, it would have increased roughly for almost 5% from bottom to top. Again, you can never buy the bottom, you can never sell the top, but on the same accord, it had a 5% fluctuation right in that time. So it kind of did what I expected it to do. Here's the question though, is it going to do it again? Right, let's find out. So if you are new to the channel, excuse me, sorry, I clear my throat a lot because I talk a lot, and I want you to know I'm not a financial advisor, right? Love teaching people to trade. Hope you can learn something here today, of course. And if you want to become a better trader, cryptocash.tech is a site. I have a trading signals university and, of course, a fantastic community. And we're really quick to touch on the community. I am so stinking impressed with my community members and just how well they've been doing with their trades. Like, we have this trade results section and just people are just killing it right now, and I'm super impressed. One more thing too, take a look at this here. Narnia Farmer, kudos to you, sir. Or ma'am, I apologize if you are a female. We're looking at a 20x long here from Luna Classic Perpetual 1000. So again, just some really cool stuff. And obviously the signals that I send out, we recently took profits on Bitcoin for 45%. Average about an 80% success rate overall this year so far. And just taking a lot of different profits. So fantastic situation there. Definitely join up if you can, because again, I got a lot of folks that are actually in the community from our XRP army. So it's actually kind of cool to have everyone together here in that regard. Very last thing just to touch on, if you want some transfer bonus USDT with BitGet, go ahead and register with the link in the description below before November 30th. You just need to transfer funds and use the exchange, but I can tell you it's my favorite exchange by far, way better than ByBit and of course KuCoin. Okay, so again, just my personal favorite there. Highly recommend you check it out. Their level 2 data is fantastic. So let's rewind a little bit here. First of all, we had this pennant pattern here, right? The bullish breakout pattern where the price action is supposed to continue higher. Instead, it broke down lower. We were able to take a nice short position as a community. The price action comes down all the way to almost bounce off of the 41.5 cent range, basically 42 cents. And then it comes up, retests this level, and essentially breaks through that resistance. Now, that break through the resistance honestly happened because of the news yesterday, right? So we got to recognize that and acknowledge that that is the fundamental catalyst. But when you have a fundamental catalyst like that, it's typically followed by technical analysis, right? Because again, it's not just going to pump and then dump. In some cases, it will continue. And you got to recognize what that does too. Because again, it changes the psychology of how people trade in a lot of ways based on how that responds. And we'll look at that, of course, and much more, but why don't we go ahead and work with the standard stuff first and just kind of work our way down. So first of all, on the daily, we want to look at moving averages and see we're trending above the 200-day set moving average. And I mentioned this yesterday that it's important to be above the 200. We were above that previously and lost it, of course, but that was just because we had too much momentum to the upside. This little push up here makes sense because we bounced off a key support here at about 44 cents and continued higher based on the daily closure. That being said, you can see how it's working perfectly within Fibonacci retracement. Look at this. It comes up exactly to 51 cents and gets rejected, comes back down almost exactly to 47 cents and effectively bounces, right? So again, these are just standard stuff. And again, if you watch other YouTubers, I'm sure they have a lot of complex things that they do, and there's nothing wrong with that, don't get me wrong. But the traditional standard trading techniques I feel are the most consistent because that's what the whales are using. They're not using all these crazy protractors and different unique trading styles, right? They're mostly just using standard relative strength index, moving averages, and occasionally a convergence or a divergence on the moving average. So those are things that you want to pay attention to. In my opinion, they highlight the most effective ways of trading, okay? Again, there's little nuances here and there, but generally speaking, the basics here is that we're above the 200-day set moving average. A closure above that today would be positive, and of course, a bounce off 47 would also be equally as positive. So I'm still leaning more towards my narrative from yesterday of increasing the value or the price from here. The price action should continue higher. We will face some resistance at 51 cents if it continues to progress upwards, but we've already noticed here that we are making higher lows on the smaller time frame. I'll show that to you here in a moment. And of course, the price is maintaining itself quite well. But it makes sense that we're seeing a slightly red day today based on yesterday being so volatile. Again, bottom to top from yesterday, close to about 20%, right? So again, good stuff there in that regard, but generally speaking, we're looking very positive here for XRP. Taking a look at the RSI, it's tapering off, which makes sense. It should and likely could come back down to 50 and effectively bounce. If it were to do that, that would put us somewhere in the range of 44 cents, which wouldn't be all that terrible either. But I do feel as if 47 cents should hold as a support level based on the 200 averaging itself out there. We do have, I wouldn't say the MACD is diverging, but you got to recognize that we are losing momentum on the daily, and that really just kind of helps us understand that there is potential for further downside. So we got to recognize that as well, right? Because in truth, we are making lower highs so far. Now, lower highs I'm not super concerned with. It's higher lows that are the most important, at least with trend reversal. So if this trend is moving down, which it is tentatively doing so, then we can recognize that a price action that would break to the upside would need to be preceded by higher lows, all right? So if we want to break through this little trend here, we need to continue to make higher lows on the smaller time frames, which is a 4 hour essentially. That is the transitionary time frame I like to pay the most attention to. And I can tell you that I almost exclusively, or if I were to choose rather, what time frame to use for my trading style, being more of a swing trader, again, short-term swing trader, I would say the 4 hours is the most important because it really helps you understand the big picture. The MACD is super, super telling, and it helps you understand a lot of different things. Speaking of the MACD, we can see here that it is still progressing upwards, where the 26 is below the 12-day exponential moving average, giving us the potential of further upside. But you got to recognize too, this is starting to dissipate, so we're losing some momentum on the 4 hour. It's not terrible. I'm not concerned with it much, but it definitely helps kind of tell us a little bit. We also can see the moving averages here, right around the 50 and the 20. They're both trending just below the price action, potentially holding the price action in place. So we got the 50 on the 4 hour and the 200 on the daily, giving us that support level that should likely continue to maintain itself above and beyond the Fibonacci retracement of 47 cents. Okay, so again, a lot of factors are kind of adding up more positively here. While it is true that we're losing momentum, obviously that momentum is going to be lost when you have a significantly large candlestick. That happens very frequently because profits are going to be taken. But we have a lot of buying pressure here at this level. In fact, why don't we take a quick look at the volume weighted profile here and kind of see right there at this point, we can see the most amount of volume right at 48 cents. Okay, so between 47 and 49, or you could round up and say 50. Between 47 and 50, we have the most amount of volume in the recent past here. And that's very, very helpful to understand based on the simple fact that volume tells us a lot about what's going to happen. Now, this volume profile visible range is not really super, like, it's like not you don't want to take a trade based on that one sentiment, but it does help you influence kind of helping understand support and resistance levels, because volume does work as support and resistance pretty consistently. We're going to take a look at the volume weighted average price on the 15 minute and kind of see what that looks like, along with the indicator that I use, my EMA view app indication, and kind of see if we are on the right side of the tracks here, and if this is going to turn itself around, we might experience a bounce off the volume weighted average price. Let's take a look at the 1 hour first. Ichimoku cloud, standard stuff here. You can see that we are above the cloud, but if you have a long position open, you may want to consider taking your profits because the lagging span is soon to intersect with the price action. We do still have momentum based on the conversion line being above the baseline, and you can also see, of course, that the price action could bounce off of the cloud here. And I love that the cloud is averaging itself out right at 47 cents. That is fantastic, absolutely awesome. So that will give us likely another stepping stone. So there's a great probability we'll see the price action continue here and then bounce off of the cloud, either the upper or lower lead. Either one could happen, all right? So again, just some things to kind of think about there. We're looking pretty overall fantastic there, but it does tell us though, obviously, because the Ichimoku cloud's a conservative indicator, it's telling us right now that you probably want to consider taking some profits just to be on the safe side. Again, if you took a long position from somewhere in the range of 43 to 48, you probably want to consider taking some of those profits. Again, I always recommend that. If being a greedy trader is not ideal. You'll occasionally get lucky once in a while, but it's not really a long-term solution. You got to take profits while you still can, when you can. And that's why I teach my community. That's why we're all learning and growing together and technically growing in the sense of their portfolio, right? They're all doing fantastic right now. I'm super excited and happy for everyone. Last thing we want to take a look at here is TD sequential. We can see here that there's not a lot of consistency. We are hitting sixes and sevens fairly often in the recent past here. We do have some sevens previously as well, but not really hitting a full-on nines here. And what that basically just means is it's not overextending itself, which is good. We like to see that. We can also see that we do have somewhat of a, an ascending pattern here as well. Like we got this little type of wedge, you could say, that's working itself out. And again, the likelihood of a breakout to the upside based on those other key level supports being below the price action tells me we're more likely to break to the upside than the downside. Again, momentum we're losing momentum to the downside, but on the same accord, we have this positivity in the sense that we have a lot of good support at specific levels. All right, last thing we want to wrap up here with, sorry I'm getting a little wordy here, is the volume weighted average price. Let me explain this to you. So volume weighted average price, every 24 hours it resets. So you'll see it pinch here at 5 p.m. Pacific Standard Time every single day. The reason why that is more of a traditional indicator designed for a regular 24-hour trading day. In other words, regular market opens, pre-market, regular market, and post-market, right? We have like the traditional hours for a regular cycle. And that's what this is designed for, to give you that reset for every single day. So the good thing about the volume weighted average price is it kind of gives us a good average and helps us understand, generally speaking, where we're at throughout the trading day, but it does get a little less consistent when you get closer to 5 p.m. So just keep that in mind, but regardless of that fact, I still use it consistently when I'm day trading, and I can tell you that it's really awesome. In other words, it pretty much tells you here that this blue line is giving us the indication that that is the volume expressed as a price. So for right now, 48.2 cents is essentially where the price action should be based on volume. It's lower than that, and therefore it's considered to be a resistance level. Okay, so what we're looking for is a break above this level here to essentially be able to give us that confirmation that we're on the right side of the tracks. Okay. Another thing to look out as well is to see these standard deviation lines. You can see the price wicked down but got rejected because it went too far outside of that deviation. Here as well, you can see the corrective behavior where it hits the standard deviation, comes back down every single time. So a lot of times you can use this in conjunction with the 15-minute RSI, and if it's ever overextended, that's when you want to, it's case in point where you want to sell off. In other words, closer to 70 are cases in point where you want to consider taking some profits. All right, that's just kind of part of the strategy that I use personally on day trading. And I think it's highly recommended. I teach this in my trading university as well. So again, if you want to kind of attend that or be part of that, cryptocash.tech is a website. But I would recommend, if you are currently a community member, of course, you're probably watching this video, make sure you revisit those videos to ensure that you are understanding specifically, the best practice, because a lot of this comes down to risk tolerance. And that's a chapter I've noticed a lot of folks will skip over or gloss over. Because if you're having a bad day in your trading, you're not doing it right. I can tell you that. Do not trade with a bad attitude. There's a lot of little things that you can kind of add up to, to kind of give us perspective on what's going on. And right now, at this point, XRP is looking fairly healthy, and I'm looking for an entry closer to 47 cents myself. But I want to wait for the volume weighted average price to work itself down and kind of average itself out closer to that level, and then we should likely see a bounce. So to me, I would speculate we're going to see a higher likelihood of an increase than a decrease. You have to understand, though, there's no guarantees. And what I mean by that is when you are doing technical analysis, you're really just adding, taking each time frame and figuring out which time frame is either positive or negative. And in this sense, we have mostly positive stuff, right? So the likelihood I feel of a retest of 51 cents at the very least is a very strong likelihood. That's just seems probable. So a trade from 47 or 48 up to 51 seems like a win-win to me. But again, you may not see it right away. It might take a couple of days for that breakout to occur. You got to be patient. That's where patience comes in as well. So anyways, a lot of stuff to think about. I hope that you learned something here today. Sorry it's so long. Geez, 14 minutes. Hope you have a great rest of your day. Thanks so much for joining me here. We'll look forward to seeing you all in the next video. Take care.